Thanks for joining us for the Member xCite presentation. The Member xCite presentation is informative, interesting to the audience, and showcases the strengths of the presenter as an entrepreneur and their area of expertise. It's not a sales pitch, it's a 10-minute educational and insightful exploration into what they do. And of course, it's exciting.
So today we have the immense pleasure of hearing from Rasti Vaibhav from Get Rare Properties, Life by Design. What would you like to do if you had all the time, money, and energy? Stop trading time for money and start living your life by design. Property investment can be an amazing way to achieve life by design, but only for those who comprehend and master the 3 Ps: principle, process, and people. Rasti is Australia's go-to property portfolio specialist who has revolutionised how aspiring Australians build multi-million-dollar properties. As a self-made property owner himself, Rasti uses his unique blueprint combining strategic diversification and sharp negotiation skills tailored for his clients' circumstances through his buyer's advisory business, Get Rare Properties. His mission is to create and empower people to be successful property investors. He's also authored a #1 bestseller book, The Property Wealth Blueprint.
The topic of this presentation today is life by design. And now what it means is that you should be looking at how you would really like to live your own life. As in, like, what do you desire? And rather than what you have to do, you want to really do what you want to do. So huge welcome. And just to share a bit about myself, like I've written a book, as we just talked about, and also I've got few awards, like I've been on multiple podcasts as well, and the whole idea is about education. I have been the winner as well as a company with like last year, winner of Business Excellence Awards in property professional services, and more importantly, my story was actually covered recently on realestate.com.au, that how I actually made it from nothing to $7 million portfolio, and it has gone really viral. As you can see, there were 85 shares, 533 comments. And the reason I'm sharing this is, like, I started with nothing. And what I know today, I can actually deliver this as much earlier. And this is what I actually talk about. Like, it's more about inspiring, educating, and using property as a mechanism to build wealth so that we can live life by design. So today's goals are basically, I know we are busy professionals, busy business owners, and still not really sure where we are heading towards in terms of our future, and to a state of mind where we are relaxed, we are enjoying sun when there is one, and suddenly it's just all overcast over here, and just relax. And today's goal is not to basically make this transition overnight or overday. It's more about sharing how we can do this in a systematic way, because property investing, just like any investing, has its own risks and return. So we have to really understand the risk element of it, as well as anticipate the returns accordingly. So very quickly, like, I'm an architect turned into an IT professional, turned into a fund manager. So I actually use the understanding the properties, use the systems, and understanding of risk and macroeconomics, like where the market is doing. Because what it allowed me, all the 3 careers that I had, allowed me to build my property portfolio. That got me financially free in less than 10 years. And that allowed me to open or form this company, Get Rare Properties, with the intent of helping other family members or business owners, other families, so that they can live life by design. So very quickly, this is a model that we work on. So for those who don't know, Get Rare is more of an acronym that it's get rich and retire early. And the model that we have is that we should always start with the end goal. Like, what is it that we are talking about? Like, put up very specific dates, numbers around, what sort of passive income we are trying to generate, what it means in terms of the holidays and the lifestyle. So this is our end goal. Once we have clarity of our end goal and the passion to achieve that, it will make just things much easier. So the model says that, like, you need to know where you are today. And now the question is that how do we go about bridging from where you are to where you want to be in a very systematic way? And the thing that I actually say this I can't really say it more, is that property investing should be considered as a business. Now, when we say for a business to be successful, we need two things: a business plan, a strategy, and also a business team to deliver. So from where you are to where you want to be, all you need is a plan. So you aim, and you have to have a team to help you with that, because you don't really want to go and reinvent the wheel. But once you have the plan with that kind of confidence, then you can go and build your portfolio one property at a time. So it's more of a systematic approach, taking into account your circumstances, that you should be looking at building wealth through properties. For example, like meet Linda. She was confused. She didn't know what to do. Very well-read person, economist by trade. And she wanted to build a portfolio. But when we run through this model, that how she should be thinking about it, we were able to, or she was able to build portfolio of 3 properties in less than 7 months. Now, the thing is that why we are doing all of this, and I guess like it comes down to 3 meaningful resources that we all have or don't have, is like time, energy, and money. But when we look at our life stages, we are always short of almost one or the other, right? Like when we are young, we have time and energy, but no money. In our adulthood, we have money and energy, but no time. In our later stage of the life, like we probably have time and money, but no energy. Now, the question is like, how do we go about having all the 3 things together so that we can enjoy the life? And it came out from the book by Robert Kiyosaki. I'm guessing that you would have heard of him, Rich Dad, Poor Dad. So he has talked about this cash flow quadrant, and is saying that 90% of wealth, 90% of population sits in these 2 left quadrants as of employee and self-employed, where they trade time for money. Now, on the other hand, 95% of the wealth actually sits on the right-hand side quadrants, where they have the system or the money that generates the money passively so that they can enjoy the life. So for us to really desire and live the life by design, we really need to move from this left 2 quadrants to the right-hand side. Now, it doesn't mean that you have to quit your job. It means that probably you can be on a business owner or investor on the passive side as well. So that's what I did. And that's what I teach, like how we should be thinking about a plan, having a team to deliver on your results. So somebody might argue that, yes, investing is great. Why don't we do in share market? And fair point, it should be more diversified portfolio. The good thing in favor of property investing is that in long run, it's that pretty much comparable returns. But the greatest thing that makes it entirely different or more powerful class is that it has its leverage. You don't really need 100% of the funds. You can use your 10% and borrow money from the bank. So that's what we talk about. Another example, probably I'll skip. So the thing is that, yes, it's all wishy-washy. How do we go about doing it? And as I was saying, that there has to be a plan. And this slide actually talks about, in very nutshell, without really taking into account your circumstances, is that we need to start with your end goal. Like what sort of passive income you would like to generate. So for example, if you are saying 100K is what I'm looking for, then if you work backwards, it means that we need to have a portfolio, give or take, of about $2.5 million. So when we have a $2.5 million portfolio fully paid off, the rent that we collect can serve in our, or can serve us in our living the life by design and in our lifestyle. But the thing is that it should be fully paid off. Otherwise, it will go to the bank as a mortgage repayment. Now, it's not easy for anyone to build a portfolio of 2.5 fully paid off. So there has to be a technique to it. Now, what we say is that there are 4 stages. Let's acquire the portfolio. Let it be leveraged as much as possible that you are comfortable with. Once you build that portfolio, we give it some time, 7, 10, 12 years, whatever it takes for it to double in value. Once we have that equity. Now, what we can do is we can sell half of the portfolio to pay the debt of all the other properties in your portfolio. So effectively, in a nutshell, we build the portfolio, we let it grow, and then at one stage when the equity is there, as in your net wealth has grown to the level that you really want, we sell a portion of your portfolio and then get the fully paid off, debt-free portfolio for which we can collect rent and live off that passive income. I know it's pretty crammed. I do run workshops. I'm very much focused on education. More than happy to talk about that in detail. But what it does is like, it gives us the strategy, and there's the philosophy that we should be thinking about picking a property. Of course, we are picking one property at a time, but strategy will define what type of the property we should buy, which location we should be buying this property, and which particular one, and at what price. Lots of people buy properties in that and talk about just the property and the price. And if they're buying in the neighborhood, then they are like not even thinking about the region. They just look at this. And it's so important that the strategy is the critical part of it, so that we can do the right thing. And of course, there are multiple ways of just picking that region. One has to go in a very elaborate way, to figure out those locations that will actually grow in value. And the way we do it is like, we have to look at the imbalances between the supply and demand. Like if there's more demand and less supply, price are bound to go up. And when you know that, okay, which area to buy, it comes down to the location thematics, like to the street level. Like unless we understand like what is the reason why the tenant or the buyer would like to live there, it will be very hard for us to just even patch or like even just guess. Like there's no guessing here. It's more about forecasting the economic growth, picking the property accordingly. So key takeaways, I know I've crammed everything here very quickly. We live only once, and investing or business can help us generate passive income so that we can live the life by design. Now, buying a property is easy. Anyone can go talk to a mortgage broker, go and pick a property in auction or just on realestate.com.au. But successful investing that works for you takes into account your risks, take into account your borrowing capacity, take into account the way you can build your portfolio is probably a very specialized role. The key thing of successful investing is just like financial leverage. We can put 10% to get 100% exposure. The key thing is like to know what to do, how to do it, so that it is worthwhile. So with that, I'll pass it back to you, Darren, or open the floor for questions.
Excellent. Thank you very much, Rasti. That was a sensationally prepared and executed presentation. Maybe let's unshare the screen so we can have everybody in one place.
Sure.
But really appreciate that. And Rasti, tell us a bit more about your book. Why did you decide to write the book?
No, great question. So the reason why I started this business of thinking about the property strategy and then coming and helping people execute is purely on education side of things. So the statistics says that 90% of property investors in Australia have only one or two properties. They can't go beyond it. But on the other hand, for properties to deliver the life that we desire or we deserve, it's only less than 1% of property investors. And with my education background, with what I have achieved, as a fund manager, it all comes down to having end goal in mind. And for me to deliver that, like I started the business as well as really want to reach out to people saying that just don't buy properties just like that. Have a strategy, have a plan, because that can be meaningful. And the whole reason is for the book and for the business is to help people appreciate the power of planning in property investing. Hence, even the name of the book, Property Wealth Blueprint.
Nice.
So that people can think about, work around it.
Yeah, there's much more to it than meets the eye, isn't there? Any questions for Rasti? We've got an incredible expert in front of us here today. I'm sure we've got some property questions. Would anybody like to start? No?
Yes, Rusty, I have a question. What's the best way to get the maximum price for your property?
Oh, when you're selling it, my opinion, first of all, you really need to pick the right selling agent. Selling agent who is not really trying to just win the business, but really want to add value. Because lots of selling agent, they overpromise. They try to get your listing from you, but when they don't really have the infrastructure to sell it, it actually sits in market for a bit too long, and then it loses its interest in the market. So picking the right, again, it goes back to the strategy, right? So pick the right team for yourself. In my opinion, the best way of doing it is the styling. Pay the maximum price possible for your styling. Just like the background of Maria, like if you can present yourself in a much better way, it just attracts more people. So having that styling, it costs $3,000, $5,000, $6,000 just to style, have a 4 weeks kind of marketing campaign. let people in, and the right property selling agent will make it work for you. So don't hesitate to spend $6,000-7,000 because that can give you $30,000-40,000 extra.
Wow.
Thank you. Great presentation. Thank you, Rusty.
You're most welcome. Thank you so much.
Any other questions? Any other budding home buyers or home sellers or property buyers or sellers in the room today? There.
So what would you advise people who are more of the mature side of the equation and they only have the 1 or 2 properties, or they only got their home? How would they get into this sort of, is there enough time or not?
No, great question. So look, it's just always forward looking. Doesn't matter whether we are on this earth for the last 30 years or 50 years, doesn't really matter at all. The key thing about property investing is leverage. I hear your question because we have to go to the bank to borrow money. Now, the good thing is that the banks look at the whole package, that whether they can lend you money or not. Now, banks are getting smart as well. They're realizing that there's a huge equity in the property that you are in. Can we take that and use that as a way of securing on the property? So there's reverse mortgages as well. So I guess where I'm coming from is that it's not about building a portfolio of 10 properties, at that stage. It might be whatever can be done. Like if you can get 3, 4, like we are there for another 20, 30 years on this earth anyway. If not, we have a legacy to leave behind for our other, loved ones in the family. So it's not just about our respective ages. It's more about what impact we want to make. Directly to answer your question, it really comes down to your mortgage broker who can help you to borrow money. Once there's a will that, yes, I would like to make some more money from my properties or via properties, mortgage can work. If even not mortgage, buying in cash, buying in super, because we are giving this property as a collateral to the bank. Now, banks are in the business of lending. As long as you present well as an application, they would lend you more money, as much as regulators allow, as much as you like. So I hear this question. It's never too late. 20 years ago, we should be planting a tree. Next best time is today.
Love it. Beautiful, Rusty.
That yesterday, or am I having a deja vu? Someone told me about, where did I hear that on the radio? Then it's procrastination week. We know that.
Oh, is that right?
And they were talking about that, exactly like saying, well, maybe today's the day we should have done something. And they said, when's the best time to, 20 years ago was the plan one, the next best day is today. So
absolutely.
Yeah, that's great. Thanks. That's twice. Interesting.
I'll drop my information. Should you have any question, anyone, or having a bit more one-on-one, please by all means, let me know. More than happy to help. I'm here to help. That's what my motivation to start this business is. I believe Ian has a question.
Yes, Ian.
If we have time, actually, I've got 2 questions for you, Rusty. Great talk today. Really enjoyed it. Thank you. First question is in relation to thoughts about interest rates. Do you think rises are inevitable now, or what do you think?
No, great question. So interest rates are inevitable that they will rise, but it's all relative, Ian. Like, to me, it's not about rising. It's more about normalizing. So typical long-term average is about 4.5 to 4.8. In late 80s, like we were talking about 17%, probably you would know better, more than I. So rising from here is in a way very good for the economy. Interest rate is a sign of economy, and we really want, because we are buying for the long term, we really want interest rates to go higher, because it's not going higher. It's more about becoming normal. When things are normal, they are more sustainable. The way that we had, like last year alone, we had 28% growth in property market. So imagine somebody has put 10% and they got 28% within a year back. So basically almost quadrupled their money from 10% to plus 28. So interest rates will actually slow down in the short term, but in long run, it will make it more sense because it takes away the speculators out of the market. So I'm glad it will happen, and it's happening soon. So of course, it's all about cash flow management, that if interest rate goes up, why don't we just fix it, as an example? Why don't we have extra buffer? Because property investing should be more about capital growth rather than the cash flow. We are not buying today so that we can collect rent to live off. We will never be able to do it because there's a mortgage to pay. So we should be buying for capital growth. So everything is more aligned. Of course, we have to be mindful of our cash flow as a family budgeting, and we have to live within those means, and plus have some buffer. So interest rates is a great thing that it's going to happen soon. In moderation,
another question.
Yeah, go for it.
In terms of if you wanted to buy property, what would be some of your favourite areas at the moment that you would still think have potential growth moving forward?
A great question. The challenge that I have in this question is there's no cookie cutter approach. It really comes down to where you are, where you want to be. And that will define in terms of your budget, in terms of risk, how much maintenance you can take, how much cash flow you should be ready to accept. So those are the constraints. And if I have to be direct, I'm not really trying to, dodge the bullet. To me, it's more about supply and demand of the location. So there's no overarching, and that's a problem with the hotspotters, as in hotspotting for the locations. They simply say that, oh, this area is great. The challenge with this approach is that area has already boomed so much, and that's why they're just confirming it. And probably it's too late already. So having said that, like, to me, it's more about affordability, because that's where the money is going in. Like Sydney and Melbourne have really had a good run last year and the year before. So the likes of Perth, likes of regional Brisbane for that matter, or even Adelaide are growing because of the affordability. Now, the key thing to think about, it's not the affordability that should just push up the price. It should be about the sustainability of that market. Now, that sustainability will be driven by supply and demand, nothing else. So I'm more keen and looking at more regionals, because that not only gives us affordability as a tick, and also the neighborhoods and work from home, and this COVID, what they has done, they have the whole thing is they have encouraged people to live in the nice homes and away from the clutter. So regionals are growing very well, and it's a long-term paradigm shift. And I'll put all my money on that if I have to pick regionals with the strong fundamentals.
Great, thank you so much, Rasti.
You're most welcome.
Awesome.